We are talking Bitcoin facts and fantasies with my guest today. Mike McGlone of Bloomberg Intelligence joins me here on Stansberry Research. Mike, it's been too long. Good to see you again.
Good to see you, Danielle, and thanks for having me back.
Yeah, well, I'm happy to dispel and debunker some myths here surrounding Bitcoin. One of the things, as you know, we often hear is how volatile it is, but you've just done an in-depth report here showing that, yeah, of course, volatility has been high for Bitcoin, but it reached new lows versus gold and equities in 2020. And I have a chart here that you've created in regards to this. So let's talk about this.
Yeah, one thing about volatility, it's always relative. So we're starting, the way I'm measuring volatility is annual, 260-day. And the significance, what really started getting me really bullish last year when Bitcoin volatility was going down and the volatility and everything else was going up. So it did reach a milestone. On 260-day volatility, reached the lowest ever versus gold, versus the S&P 500, almost reached 1-to-1 versus the S&P 500, and the lowest ever versus crude oil. So when people say Bitcoin volatility is high, yeah, sure, it's only been around 10 years. I mean, gold's been around since the beginning of time. And Bitcoin annual volatility is around 50 right now. So that's a longer term measure, which is about the same volatility that gold was trading at in 1980, right when it had that big rally. So to me, when people say it's volatile, sure, it's breaking out to all-time new highs. It's got a lot of unique things happening to it, but compared to other assets, it's lowest ever.
I think that's hard for a lot of people to digest because, you don't see 30% corrections in gold. I mean, yes, it could happen in a day, but you see that in Bitcoin.
It's normal. And let's look at 2017. Bitcoin increased, I think, about 17x, and it corrected 4 to 5 times, about 30%. The first correction was what we've seen, very similar to what we saw now. And that's when it corrected about 1/3, went back to the old highs, and then it went from 2 to 3,000 to 20,000. I'm fearful. I expect it could very much do similar this year. So we've gone to 42,000. We've corrected to 40 to 30. And I see Bitcoin kind of stuck in a range between 30 and 40 for a while. It's just probing for support, probing for resistance. And the big difference this year compared to any time in the past is supply is the least it's ever been and demand's picking up. So you do the math as a commodity guy, price must go higher.
So on the upside, where could you possibly see Bitcoin headed? I mean, in what camp do you fall in, Mike?
Yeah, I'm trying to be careful with putting out those pie in the sky levels. So my first thought is one bridge at a time. 50,000 is pretty good resistance. That would be about $1 trillion market cap, and that the key thing about that is it gets it into the bigger space of the larger institutions. And that's a unique thing about Bitcoin is getting above there means it actually increases a demand and adoption. It's a rare case with Bitcoin. I don't see it getting much below 30. Remember last year's close around 29,000. And we've had a major shift in demand and paradigm shift in mentality. And the key thing I think it's really shifted is reputation risk. People now who are poo-pooing it and are against it are at risk. As you look back 5 years from now, if they're wrong, they're oftentimes getting paid a lot of money to pick up on these kind of things. So
Right.
that's where I see it right now.
And helping, I guess, shed the negative image surrounding Bitcoin is this Wall Street acceptance, as you say, Mike. We see BlackRock has authorized 2 of its funds to invest in Bitcoin futures. This was according to filings from the SEC. How important is the Wall Street embracement of Bitcoin here?
It is significant, partly because that's part of the reason I think volatility will decline a little bit, because Wall Street's good at arbing, as are, you mentioned, futures. Futures will lessen volatility. I sense what I see in the market is a bid below from institutions getting in, not just Wall Street, but insurance companies, pension funds, endowments, potentially central banks, maybe not in the US yet, but all coming on board that this is a digital form of gold in a digitalized world, a world that's going digital. So that's what I see coming on. And the key thing that also happened last year was when PayPal opened up to its over 300 million subscribers. The typical question I get is, how do you buy it? And I have to open an account. And most people have a PayPal account. So I think your average Joe in the US has been doing that. That's one thing that's really shifted last year. It's not only Wall Street, but a lot of US investors have been getting involved, North American versus Asia in the past. And we have the most stable currency on the planet. So it makes less sense for us. But I think a lot of North Americans are seeing performance and seeing the upside.
Well, and your colleagues at Bloomberg actually did a great report on this that I read, showing that there's more and more new investors entering the Bitcoin playing field here, despite $40,000 investment tags here. So do you think that it's shedding this image of being dangerous and off limits?
Oh, sure. Danger, well, it definitely is. And to me, volatility is always relative. If it's got a volatility of 50%, you don't want to weight it the same as something in your portfolio is a volatility of 10%. You cut it back that much. It definitely is. So one thing I really have heard a lot about is this issue. It's been used by criminals. The fact that I have heard in the past, it's been around 1% or so or more activity. Last year, the fact I heard is it dropped to less than a third of a percent, and that's just continuing to happen. So the trend is very friendly. And the key thing I point out and I look at every day is I don't know what it's going to take to really break up this trend, to end this trend. And I can see a lot of reasons for it to continue doing what it has been in the past, and that is appreciating.
Mike, in the past, I've always spoken to you about gold. So I need to get your thoughts on what's happening on the gold front. And many experts saying that gold should really be around the 1905 level here. How would you grade gold's performance right now?
I think something like 1905 is just a little bit of noise. As we speak, gold's just below 1900. I see 2000 as the next resistance. It should break through. I don't see what it's going to take for gold to hold down. Now, you've heard me say that to stay lower. You've heard me say that for quite a while. Just look at global debt to GDP levels, clearly an upward trajectory. Global QE clearly heading higher. Those trends are more likely to accelerate. And gold, to me, is just simply a consolidating bull market. That's one of the attractions of gold. It's been in a stair-step rally for a number of years. It's in a pause phase. It should just go up to the next level. And I don't know what it's going to take to stop that. It's just marking its time. But to the key risks for anybody looking forward in gold is I see gold positions somewhat naked if they're not paired with some Bitcoin, because Bitcoin is the new version of gold. And I see that, I sense it. And a lot of the indicators show those flows are going that way. Some of the old guard gold bugs and gold flows have headed towards Bitcoin. It makes sense. I mean, let's look to the future.
Well, I see that you have this newfound embracement of Bitcoin. We were talking about that a little offline, but you're saying you're just there to provide facts, right?
Yeah, and I appreciate that you mentioned it, because I had a former colleague who's in this space said, "Oh," the other day, say, "Thank you for supporting us." And that's one thing I love what I do here at Bloomberg is I'm completely neutral. I'm not supporting anybody. Completely neutral. I write most notably for Bloomberg terminal subscribers, and it trickles down. And I'm completely unbiased. And I have to admit, I've become a bit of a zealot. I was, who's converted to Bitcoin. I didn't really believe it at first, but every day you go by and dig in and see the world going digital, and certainly this year going away from paper money, Bitcoin is kind of the go-to, especially in a world that has zero interest rates, and it's no one else's liability, no one else's project, and supply is going down, demand's going up. It's digital in a digital world.
Okay, last thought then, since you are unbiased. When we're talking wealth preservation, okay, this is a hot topic right now. Gold has traditionally been a great way to preserve wealth. Bitcoin enthusiasts are making the case that Bitcoin's the better bet than gold for long-term wealth preservation. But it's frightening for many investors to think, how could I put $1 million in Bitcoin now? And how do I know where it's going to be 30 years from now?
Well, the old narrative was you should maybe put in 1% of your investable assets. I think that's been picked up to 2 to 5%. It makes a lot of sense as it comes into the mainstream. And I think gold has been, like, if you look at the S&P total return, S&P 500 total return, it's the same 4 ounces of gold since 1997. If you look at the farmland in Iowa, it's the same 4 ounces of gold since 1974. So yes, that preserved store value gold has held its place. The key thing to remember is the stock market's underperforming it lately. So, but looking forward in a world going digital, I see Bitcoin as adding competition to gold. I'm bullish gold, but I see Bitcoin should actually be in that same bucket, because if you're holding only gold,
Yeah,
I feel it's a little bit naked without Bitcoin.
interesting. All right, Mike McGlone, I appreciate your thoughts. I really do. Come back. You're always welcome.
Thanks for having me.
And thank you for watching. We'll have much more for you. So be sure to stay tuned to Stansberry Research. In the meantime, follow us on all our social media platforms. Thank you for watching. I'm Daniela Cambone.